Welcome back to the channel. It's me, Adam. You're watching Unlimited Options Investing, and this week is going to be crazy with all the upcoming earnings starting today with Facebook after the close. If you haven't had a chance, take a look at my video that I posted yesterday. I talk about the most anticipated earnings of the upcoming week, this week, and giving my opinion on the stocks that are reporting, or at least the ones that I find the most important. So in this video, I want to take a quick market recap. So we're going to take a look at the SPY, the QQQ, the Dow Jones, of course, dollar index, 10-year, silver, gold, obviously, and then crypto, so Bitcoin, Ether, and Cardano. And actually, we'll take a look at SHIB Inu, as that one has had a crazy weekend as well. What a world that we live in. So before we get into the video, if you're new to the channel, welcome aboard and hit that subscribe button. Here at Unlimited Options Investing, we talk everything from stocks, crypto, options, ETFs, precious metals, all the good stuff. We're investing for the long term. As always, smash that like button and let's get started. So we're going right into the charts and the candlesticks. We're not going to be looking at any fundamentals. We're just going to try and get a read of the price action and where we could potentially be going moving forward. So we're going to be starting off with the FAANG index, which is Facebook, Apple, Amazon, Netflix, and Google. I always say this, but I wish instead of Netflix, this was Microsoft instead, making FAANG, but it is what it is for now. But you can more or less get an idea of how big tech is doing by looking at the FAANG index, especially because it makes such a big part of the NASDAQ and of the S&P 500, which we're also going to be looking at. So right now we're looking at the daily, meaning every candlestick is showing us a duration of 1 day. And so we can see that the last week and a half has been pretty good. We had 1, 2, 3, 4, 5 days in a row of upside. And we see that it topped out at this blue line that I had drawn from months and months and months ago. And then on Friday we had a big red candle, down almost 2%. And if we zoom in a little bit, we see that it bounced perfectly off that 20 EMA and found a little bit of buying pressure and closing a little bit above that. And zooming out, taking a look at the weekly. So we definitely see a couple of weeks ago this green hammer candle over here, showing us that there was buying pressure at these levels, and then we saw a subsequent 2 green weeks in a row. For the entirety of the year, we've been respecting this 20 EMA on the weekly. Although we do cross below it on a few occasions, we've been always finding buying pressure on this bull run. So right now, this last candle that we're seeing is not really telling us much in terms of possible direction moving forward, and that makes sense because so many of these companies are reporting earnings this week. Facebook, Apple, Amazon, and Google are all reporting this week. Netflix reported last week. And if I had my way and this was Microsoft, Microsoft is also reporting this week as well. So then turning our attention to the S&P 500, the SPY, this one looking a little bit cleaner than the FAANG index. Same idea, whenever we're below the 20 EMA, we're often finding buying pressure. And when we take a look at the daily, on Friday over here we had an indecision candle, meaning the open and the close are similar prices, and we have a wick underneath and above, meaning the buyers and the sellers are both battling it out to see which one is going to be winning. Earnings are going to have a big impact on this week and potentially where we could be moving for that next big move. So then when we move to the NASDAQ, we can actually see that this one's looking a little bit weaker than the S&P 500. In the S&P 500, you don't just have technology, you have financials, healthcare, energy, real estate, consumer defensive, whereas QQQ are the biggest corporations that are non-financial, and most of those would be technology. So after looking at the FAANG index as well as the QQQ, it doesn't look the strongest, but again, depending on how those earnings go, this blue line that we saw resistance this past week, it could get obliterated and then we would be testing all-time highs from there. Maybe not. Maybe we start testing these moving averages again, or maybe we break them and we could be testing the bottom of this ascending channel just like we did at the beginning of October. And this channel's been intact for the better part of the past year or so. Looking at the Dow Jones, this one's at all-time highs, so we were in a channel over the past few months, bouncing between about 335 and about 355. And just this past week, we broke that resistance of this channel. However, we've had 1, 2, 3, 4, 5, 6, 7 days in a row of green candles, and we have massive gap ups in between. So would it be that surprising if we came back down to this 350 mark and started filling in that gap? Not really. But it also doesn't necessarily mean that's going to happen either. If we take a look back at around April time, we see a gap up over here and never ended up filling moving forward. So just because there's a gap up doesn't necessarily mean that's going to be filling 100% of the time. When we take a look at the 10-year Treasury note yield, we've had a good amount of strength over the past week, and this usually affects technology or high growth stocks, although we haven't really been seeing that over the past week. Right now it's hitting a critical resistance and we see downward pressure as it touched about 1.7, and when we look left and look back at about May time, as well as in April, whenever we would touch that 170, we would often find pressure to the downside. Ever since mid to late September, we've been on a pretty nice rise, pulling back and touching that 20 EMA, and then rebounding back up. What we're looking at right now, if there's continued weakness, that it would potentially be bouncing off that 20 EMA again, if not the 50 EMA But with all the inflation that we're seeing around us right now and all that's been going on around the world, I don't know how hopeful I am for the 10-year to be pulling back significantly. But again, we don't know. But I see this one consolidating or even rising higher, putting pressure on the Nasdaq, but we'll have to wait and see what happens with that. Also looking at the dollar index, this one peaked at just over 94.50. Now we pull back, we're between the 20 and the 50 EMA. When we've seen that in recent history, usually that ended up being a buying opportunity of the dollar. And usually, not always, when the dollar is going up, it also puts pressure on the stock market as well as precious metals. Looking at the VIX, which is the volatility of the S&P 500 index, it's also a popular indication of fear and greed. Over the past 2 to 3 weeks, I would say, we've really calmed down those initial spikes in September and October, and we're nearing those multi-month lows. So we could either be consolidating around these prices, we could potentially break this 14 area of support, or maybe we spike up because of the earnings, but at the moment we're currently very calm. Investors aren't very fearful these days. IWM, which consists of the Russell 2000, which are all small cap companies. This one's still trading sideways in our dandy channel until we break this 235 mark. We don't really get excited, and if we drop below these low levels of this channel, that it could be a potential buying opportunity as it has been over and over again this year. But you never know, it could break this 210, 200 level mark, show incredible weakness. But as we've seen before on this channel, if we take a look at the S&P 600 small cap index, you can see that we are historically at undervalued levels compared to where we have been in the past. Similar could be said of mid caps. We aren't trading very rich at all. However, that isn't the case when it comes to large cap companies, especially those big tech companies. Those ones are currently trading at historically high valuations. Either those stocks have to come down a little bit or they have to grow into those valuations over time. Looking at gold, this one isn't very exciting at the moment. Pretty much trading sideways until we break the 1850 mark. This one's kind of just in its own little groove at the moment. Also looking at silver, and I actually think I made a video at the time, at the end of September, saying that silver was right on that critical support. Because look at this, zooming out, you see that every time it hit this level, it always found buying pressure. But if we did break this level, it could have been really bad. However, the buyers did step up, and now we're trading much higher than we were before. And this is looking a lot stronger than gold right now. If we do break, let's say, this $25 mark, then things could be getting a lot more interesting. And the part that most people get the most excited about are Bitcoin, Ether, and Cardano. So this past week, we hit an all-time high for Bitcoin, just above 65,000 US dollars. However, we hit that point, we all got excited, and then it sold off. I don't think this is detrimental whatsoever to the price action. As we still are in bullish context, that doesn't necessarily mean that we're going to be reaching all-time highs tomorrow, but a little bit of a breather is good for Bitcoin. Just looking at the crazy October run that this one has had so far, from as low as that $40,000 mark all the way up to about 67 or so, and now hovering around the 60,000. So ideally what we want to see, buying pressure at the $60,000 mark, because the previous resistance that we saw in May, as well as April and March time, becomes the new support over here where we are right now. If we do lag a little bit below 60, then hopefully we find that buying pressure at the 20, this red line over here. If we do break the 20, again, not the end of the world. Maybe you find buying pressure at the 50 or below it, like we saw again at the beginning of October. The lower we go below 60, the less confident, I guess I would say, about Bitcoin running in the near future, but I wouldn't count it out just yet. It wouldn't be the worst thing in the world for this one to get some breathing room, but when we look at Ethereum, this one has been ripping higher over the past 6 or 7 days, and similar to Bitcoin, this one is really testing its all-time highs. So we're definitely still in bullish context, 2 steps forward, 1 step back. Seeing consolidation at these levels would be really healthy. If we have that pullback, hopefully nothing lower than 20 EMA, and hopefully to all-time highs, very exciting for Ethereum. And looking at Cardano, I think one is still range bound between that $2 mark and that $2.50. Again, until it breaks any one of those levels, you can't really get excited about it. Although as far as I've heard, Cardano has a pretty strong fundamentals behind it. No wonder our gas prices are so freaking expensive. This one is just not giving up over the past month and a half, going from $70 a barrel to going up all the way to a multi-year high of almost $85 per barrel. And where does this one stop? And your guess is as good as mine as to where this one ends up peaking. And when we take a look at the monthly, when we take a look at this candle, it just rips above the previous resistance from 2018. With inflation running rampant and everything going on around us, there's really no telling how high oil ends up going. The next stop would be around 90, and if it continues even going higher than that, then you could say 100, and then we can see from there. Although oil is a very manipulated commodity, we don't see any indication as to where this one could be peaking. And lastly, we have Shiba Inu, and this one has broken out to all-time highs this past weekend over the past 3 days. We broke that critical resistance. I'm just going to say 3.562 cents because I have no idea what the correct decimal place for that one is. Reaching a peak of about 4.5 cents and pulling back, finding support at the previous resistance. So it'll be interesting to see if this one holds at these levels or if we pull back to 20 EMA, back to where we were before, or if the buyers can maintain this price. And taking a look at coinmarketcap.com, we see that Shiba Inu is now taking over the 13th spot. With a market cap of $15.68 billion, Shiba Inu coin, $15.6 billion. Let me say that one more time. Shiba Inu coin, $15.68 billion. Unbelievable. And that's the end of my video. Thank you very much for watching. Let me know in the comments below what you're looking at the market this week. And in general, as always, subscribe, like, and I will see you in the next video.